All right, good morning. Today is the last day of February, February 28th, Thursday, and the market just opened up. And the first market we're looking at here is Salesforce.com, CRM. If you recall, we put on a trade yesterday at 166.88. So market took out the prior bars high, right? We are at logical support right now. I'm expecting some type of bounce to the upside. Market opened up. We're at 167.07 right now. If you recall, our initial stop loss is going to be directly below yesterday's low. Yesterday's low was 162 even, so I'm going 20 cents below that. Remember, on a stock over $100, I typically use 20-cent penetration through highs and lows, okay? So since yesterday's low was 162, I'm going to 161.80. My first profit target, my first area in which I'll take something off the table is exactly what I'm risking. If I'm risking $5, which if you go 166.88, my entry minus the 161.80, 80, it'd be $5.08. So if you add $5.08 up, right? If you add 508 plus the 166.88, it puts us at 171.96. It puts us up in here, okay? It's just our first level. That's the first level in which we're taking something off the table. And then we won't be risking anything on this trade. So I want to see what occurs today. If the market is able to take out, again, I'm very quick to move those stops. I mean, when everything's done and set, I want to be at minimum 2-to-1 risk to reward ratio. So if I am risking $5.08, when everything's done and said, the way I manage a trade, right? The way I manage a trade and have my profit target set, that I will be looking to make $10.16 minimum on this trade. So that's what we try to do. So if today is able to take out yesterday's high was 168.21. If we take out 168.21, which we're getting close to now, close to 168, then I will bring this stop up. And I want to see the intraday price action before I do that, okay? So that is a trade that I am in right now. Now, another trade that I put on late in the day yesterday, and let's flip to that, is SDS. SDS is the inverse of the S&P 500, right? If you think the market's going, if you think the overall market is going to go down, you would buy SDS. It's 2-to-1, right? SSO is the 2-to-1 S&P to the upside. They're index funds, right? So looking at the E-mini chart, look at the E-mini chart yesterday. This is what I want to show you, okay? Let's just go to a bigger chart even here, okay? Let's see. Here we go. This is the E-mini S&P 500 chart. Let's take a look at this. Now, remember a couple days ago I mentioned, look at this is the high of the year. This is the low of the year. Look at when we got that big sell-off a couple days ago, this day right here, huge day to the downside. Look at the market came to a 50% retracement of the entire year's up move. From low to high, market pulled back 50% of that. So this is an area in which you're looking to potentially go long, okay? So when I saw, right, 2 days ago, make a lower low right here, a lower low, and a lower high right here, that was my trigger to look to go long. If the market was able to take out the high of yesterday, that is a good trade to the upside. Now, who would have known the market would have taken off like it did yesterday, okay? So, again, there was a good trade, and look at this. The initial style, this is the daily chart. So your risk is a little bigger when you put on a trade. So look at, 2 days ago, the high was 14.97 You'd go long at 14.98 with an initial stop loss directly below the low of the day, right? That low was 14.82 so 14.82 is a fine place to stick your stop. Now, if you do that, your initial risk on that is 16 full points, 16 points. So you go long about when the market takes out the high, which it did, early in the morning with an initial stop loss below the low. Now look at the market ran up to 15.19. It gave you what, 18, 19 points. And if you flip quickly to an intraday chart, take a look at this action. Market opened up, took out the high of the day and continued moving higher. So as soon as you had that first, what I call an active low put in place right here, you would take that initial stop loss, which was sitting right below the low of the day here on a daily chart, and then you would move it up to below this low. Okay, and you would continue to do that all day long. So as soon as the market put in this high, came down, and came back up through this high here, you would take that initial stop loss, which was sitting down at 1482.25 on a daily chart, and you'd move it up to below this low here, 1504, 1503 3/4. Runs up again, pulls down. Look at these lows. As soon as the market comes back up through these highs, you would then move your stop up again to below these lows, and you'd continue doing it. So of course, your initial risk on that was 16 points. You're looking to make minimum 16 points on that trade, and that would have easily been hit. So a pretty good trade there in the E-minis yesterday, as you saw when the market broke up through the highs. So that is a trade that I look for. It's a good trade setup. Very, very similar to the CRM trade that we are currently long, right? Market pulled down, up here. Let me go back here. So again, very similar to the CRM trade that we put on yesterday, right? Market has gotten hit from this high, came down again. Granted, starting to take out that 50 exponential, but we're right between the gray action zone here. Made a lower high and a lower low here. Close near the lows of the day, but when the market came down and took out the low of that bar and then completely reversed later on in the day and took out the high, that's the reason why I went long at the 166.88. So again, just to reiterate the reasons behind that trade, look at now. The market has rallied up to 168.47, breaking up through 168.21, which is yesterday's high. So I am going to go and move my stop even further now so I risk less. Let me give you an exact place where I'm moving that. All right, what I've done is I've measured my Fibonacci retracements from the low. Here, let me take this down. Measured it from the low to today's high so far. Look at that. Look, 168.97, almost 169 right now. It's even higher than that. From where I measured. I measured from this low to the high that we've run up to, and I want to put my stop, I want to move it up to below the 61.8% retracement, which is 164. It was 160. Okay, I've moved it up to 164.22. My stop now is at 164.22, up from 161.88. So when I first put this trade on, as I told you yesterday and this morning, first thing about 5 minutes ago, right? My initial stop loss was 161.88. I was risking $5.08. Now I've moved it up to 164.22. Now I'm risking $2.66 on this trade, and my first profit objective is 171.96. Looking to make $5.08, risking $2.66. Not a bad trade, okay? Now, back to the SDS trade that I was mentioning earlier, okay? I bought this as the market ran up, as the E-minis ran up yesterday. Again, let me go back here. Look at market ran up. This is what I'm looking to do. I know the trend is up. I know it's up, okay? But I think look at my stop is above the highs, okay? Again, for every 1 point in the E-mini S&P 500, the SDS moves only about 4 cents, a 4-cent move. So what I'm doing as the market near the high of yesterday is when I actually put this trade on. Near the end of the day, I bought the SDS. Okay, so if I think the overall market is going to go down in price, SDS is going to go up in price. Let me tell you exactly, show you exactly where I bought the SDS. I bought the SDS at $47.19. $47.19. It's trading at $47.12 right now. Now, my initial stop loss, okay, now hear me here, is going to be below the lowest low, which means that the E-minis would have to take out the highs. Okay, it's going to be below this low of 46.53. Okay, let me give you an exact price though. The low is 46.53. Look at the ATR on SDS. The ATR is 87 cents. Right? I'm gonna subtract 87 cents down from this low, and that's where my initial stop loss is going to be. So, if you take the low of 46.53 and subtract 89 cents. It was 89 cents before the market opened, 89 cents. So I subtracted 89 cents down from the 46.53. That puts me at a price of 45.64. So I'm long at 47.19 with my stop loss at 45.64. I'm risking $1.55 on this. $1.55 on this trade. Okay, betting that the market is not going to take out the E-minis. The highs rather, which would mean the low of the SDS. You follow me there? So I'm giving it room. If I were trading this on the E-minis, I would take one ATR and add it to the high right here, and that's what would my initial stop loss be on the E-minis. But I'm not trading the E-minis on the short side. I'm buying the SDS. So I'm betting on the fact that the market is going to make some move down, some move to the downside before it comes up and blows through the high. That's all I'm saying. I'm saying that I'm anticipating the market to kind of roll over a little bit in here, down into this area, before it blows up through the high. So we'll see. Okay, we'll see. So that's where I'm at. Let's see quickly what the CRM is doing. Okay, CRM, Salesforce.com. Today's high was 169 even. Okay, 169 even. It's up to 168.30. I'm not risking a whole lot on this trade anymore. I've got the SDS trade on. So hopefully it makes sense to you. I know this is a little longer than normal video, but hope you enjoyed it. Have a profitable day, and I'll talk to you tomorrow. Bye.